She's a beautiful woman with a mysterious smile, and she's valued at around $860 million. I am talking about Mona Lisa, of course. Now, here's a question. If you had bought Mona Lisa from the very beginning, would that have been a good investment? In this episode, we're going to talk about investing in art and if it's a good investment or if stocks are even better. Let's dive in. Here is something that will blow your mind. Francis I of France bought Mona Lisa for 4,000 écus way back in 1540. And as I said before, she is now worth more than $860 million. That's a lot. In the partnership letter, Warren Buffett actually uses Mona Lisa as an example of why investing in art is a bad investment. Now, we are talking of presumably the most valuable painting in the world. We actually don't know exactly how much Mona Lisa is worth because she's not for sale. But according to the insurance, she will be around 860. But if she was sold on the open market, she would probably be worth a lot more. But let's go with 860 million. Here is what Warren Buffett says in the letter of 1957, and I will just simply read it. Since the whole subject of compounding has such a crass ring to it, I will attempt to introduce a little class into this discussion by turning to the art world. Francis I of France paid 4,000 écus in 1540 for Leonardo da Vinci's Mona Lisa. On the off chance that a few of you have not kept track of the fluctuations of the écu, 4,000 converted out to about $20,000. If Francis had kept his feet on the ground and he and his trustees had been able to find a 6% after-tax investment, the estate would now be worth something of, that's a lot of zeros, 1 0 0 0 0 0 0 0 0 0 0 0 0 0. It's so many zeros my eyes can't focus on, like, what is this amount? Well, let's read on. He says, that's 1 quadrillion. Quadrillion. Okay, is this Roblox? Is this Squirrel Garden? Let's do it again. That's 1 quadrillion over 3,000 times the present national debt, all from 6%. I trust this will end all discussions in our household about any purchase of paintings qualifying as investment. So 1 quadrillion, huh? I can hardly pronounce it. Let's go again. 1 quadrillion, 1 quadrillion. You know, when Warren Buffett, he tests his mic, he doesn't go 1, 2, 3. He goes 1 million, 2 million, 3 million. Maybe we should go 1 quadrillion, 2 quadrillion, 3 quadrillion. Why is quadrillion so hard to say? Anyway, quadrillion has 15 zeros. France would basically be able to buy every major company in the world many times over. It's a lot of money, and it really shows the power of compounding. Instead, they have a beautiful painting in Louvre. Yes, it will generate an income from the tickets, but it's nothing like a quadrillion. Before we talk about the incredible history of art and how important it is, let me just tell you another story from my life. So I decided to invest in art. This was in just after the financial crisis. And at my work, I was working at a newspaper, they were selling out from their collection of art. They were presenting it as a really good opportunity to buy the masters at a favorable price to the employees. You know what? I still have most of the art, and I even kept the little notes that were on the pieces. So here it says, a starting offer, 1,200, that's Danish kroners. And I could see that I wrote, I bought it for 600. So this was kind of like a reverse auction. They set a number, and then instead of the prices going up, they went down. And that triggered something in me. I think I felt, oh, this is a really good offer. And I knew absolutely nothing about art. But because the price went down, I was like, that's amazing. You know, they introduced it as a really good opportunity from the get-go, from the price that they had put. And then it just went down. Here's another one that says 7,000. And it says, I bought it for 3,300. And this is a painting. Actually, it's not painting. It's a lithography by Bjørn Nørgaard. He's famous in Denmark, where I come from. And the question is, do I actually like it? Not too much. It looks a little messy. Bjørn Nørgaard, he does have a lot of beautiful art, but this particular one is not one of his best. And here's another one that says 3,000 sold for 2,500. Here's another one that says 3,000. I remember I bought two of these. I don't remember what I bought one for, but I remember one, I bought it for only 100 kroners. Maybe I was already a value investor back then, just with art. Here's another one, 800 sold for 500. 200 sold for 100. I actually specifically remember this one. It was very ugly. It was very dark. It was a pencil drawing of a head, and it looked like a skull, and it scared my kids, so I think I threw it out, honestly. I'm sorry. Okay, so let's talk about this. All in all, I calculated it on a piece of paper here. I purchased art for 7,400 kroners in 2009. Now, if you remember, stocks were very cheap at that time. And I was invested in ETFs at that point. And I do know that just within a few years, that money quadrupled. So let's be very conservative and say it quadrupled. And that means that my 2,400 times 4 would be almost 30,000 kroners now. And what happened with this art? Honestly, some of it I threw out because it was just too ugly. I tried to sell it. I tried to sell all of it on auctions. I couldn't sell any of it. I didn't know a lot about art. And what I realized is when you buy lithography, it's like, it's printed, so it's not unique. And that's very hard to sell. So that was the only time I bought real art. That's actually not true. I did buy something here where I live now in Portugal, but that was from a different perspective. That was a piece of art that I really wanted to have on my wall. Not as an investment. I thought of it as buying a sofa or a vase. It's something I want in my house. It's not an investment at all. So yes, I do buy art because I like it. And if I want to make a good investment, I turn to stocks. Warren Buffett divides all assets into two different kinds of assets: productive assets and non-productive assets. Think of productive assets like a farm. The farm will produce something: corn, eggs, beef. You can harvest things and you can sell that. Companies are productive assets. They produce things, they innovate, they make the world better, they hire people and they fire people. I've tried that. But it's a good thing that they improve the world with their products and that they hire people so they can earn a living. The point here is that productive assets are working for you even when you're sleeping. Another very important point here is you can calculate how much a productive asset is worth because there are values inside a company. They create an income. Let's compare it with investing in a house. So let's say you buy an apartment building and you can rent out those apartments and you get an income from that. Now, there will be some cost associated with keeping this building. There will be restorations, there will be probably a gardener, you need a new roof now and then. And the cost, you can deduct that from the income. And then you have what we call owner earnings. Owner earnings is the money that theoretically you could put in your pocket if you own the whole building. The way that Warren Buffett calculates what a company is worth is that he calculates the owner earnings. And then when he wants to figure out what to buy a company for or building, he buys buildings as well. He will calculate what is the owner earnings. He will multiply that with 10. And that's the price that he would like to buy the asset for. And you have the other type of assets, the non-productive assets. Buffett's favorite example is gold. A lot of people love investing in gold because it feels safe. It's something physical. If you actually buy a gold bar, it's a physical thing you can hold. And with stocks, it's more difficult to have that feeling of something physical. But the problem with gold is it doesn't produce anything. You can put it in your safe. You can take it out once in a while and it will look exactly the same. It didn't produce anything. It didn't hire anyone. It didn't make the world better. It didn't innovate. You can touch it. You can polish it. You can even cuddle it. You can sleep with it under your pillow. But it doesn't change the world. And the only way that it will be worth more is that other people are willing to pay more for this dead thing. Art falls into this category. Vintage cars, watches, cryptocurrencies fall into this category. Whenever you think about investing in something, ask yourself, does it actually do anything? Does it create something? Does it create an income so we can calculate owners' earnings? Now, you might ask yourself, does Warren Buffett own any art? As far as I know, at least from what we know about his office, he doesn't. This is fascinating because he has been the richest man in the world until he started donating his stocks and money. But he can afford any piece of art that he wants. He can have anything on his wall. Yet on his walls, you will find really odd things. He will frame memories and things that matter to him. For example, newspaper clippings. Headlines from the 1929 stock market crash. I believe he has a picture of his father, who he loved dearly. On his wall, there will be things that mean something to him, that will remind him of a good investing lesson or remind him why he does what he does. I believe that Warren Buffett works the way that I just explained with my investment in art, that he doesn't just think about the amount that he invested in a piece of art, but he thinks about what it will be worth with the power of compounding. So if that investment, if you like to call it that, in a piece of art quadrupled in a few years, what is it really worth? That's really the price you are paying for the painting on your wall. A funny thing about Warren Buffett is that he actually considers his work to be a piece of art. He talks about himself as an art collector. He collects companies the way that a curator collects art. So here's what I want you to take away from this lesson. Investing in stocks is just superior to investing in art or gold or any of the non-productive assets. And when you invest, you have to think about what would happen if I invested in something else. That's the alternative cost. And learn to distinguish between assets that actually do something in this world and assets that are non-productive. Productive assets and non-productive assets. When you invest in something that is not productive and only dependent on what the next person is willing to buy for it, it's actually speculation. It's not investment. In my opinion, you can't say, I'm investing in crypto. You are speculating in crypto. You are speculating that it will go up in value. You cannot calculate what a crypto coin is worth because it doesn't actually have an inherent value inside of it. The decision you make today will determine the future for you and your kids. What you invest in today can make a really huge difference, not just for you, but for the kids, for the kids, for the grandchildren in the future. So make a brave choice. Choose freedom, choose compounding, choose productive assets. That was it for today. Now go watch another video or listen to another podcast. I'll see you next time. Francis the First of France. 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 I can't. Francis the First of France. Francis the First of France. Francis the First of France. Okay, let's go.